For more on the state of play right now for the markets, for treasuries, for equities, we're joined now by Henley Smith, Chief Investment Officer, Commonwealth Asset Management. Henley Smith was formerly the Chief Investment Officer at Gabelli Fixed Income. Henley, always a pleasure. Thanks for coming in.
Thanks.
All right, so you heard what Bill Gross said. You've heard the quotes from Bruce Berkowitz.
Yes.
What do you do as an investor?
Well, at this point, I agree with PIMCO, and I wouldn't be chasing 10-year notes at 260 right now. So it's been a challenge for investors and traders alike. So my mantra right now is stay short, stay focused, but stay engaged and pay attention.
All right, but don't we get to blame you? Because just before you came on, you were telling me that you were the one who was buying all those treasuries last week.
Absolutely. Well, I deal in the short duration part of the curve.
Why were you buying last week? You thought it was the gift that would keep on giving.
Well, again, I thought that Washington would stumble its way into some type of compromise, and I thought that the reports of default on U.S. Treasuries were way overblown. So when the short market started to sell off, specifically in the August Treasury bills, we were a buyer at that point. We just thought it got out of control. So we kind of went against the grain, and it paid off for us.
All right, but you're talking short duration, right?
Yes, absolutely.
Well, you take a look at what happened to the 30-year today. Was it 3.93%?
Yeah.
I mean, really, why would anyone in their right mind lend money to the government for 30 years? For 3.93.
Well,
who's doing this?
I said I wouldn't be chasing those yields right now. I think that the Treasury market really is built on some shifting sand right now. And you have to remember, only a month ago, prior to the last employment report, we had an ADP number that was very strong. And that 10-year note actually traded off to about 320. So as a trader, I saw that as very cautious because it really sold off very quickly. So I wouldn't chase this market. Have a commitment to it, but boy, don't chase it.
All right, so don't chase the market. What do you make of the equity sell-off today? I mean, is this just a situation where people are looking at the economy? They looked at the personal spending numbers and they said, boy, things are a lot worse than we expected. Let's get out now while the getting's good.
Well, again, I'm sure you saw a lot last week. The markets hate uncertainty, and that continues to be the case at this point. I think what Washington, and they're making maybe a step towards that, is to provide an environment a strong environment for business, and I don't think they're doing that. And I think what's happened up until the last couple of weeks with all this uncertainty is, I think, just manifesting itself in the equity markets right now. So.
All right. Well, we were on David Lynch from Bloomberg News. He was on earlier during the program, and he was talking, for example, about the payroll tax holiday. That's the 2 percentage point tax that has really not affected anyone this year because we've decided to forego that. That's scheduled to come back January 1st, 2012.
Yes.
What effect is that going to have on the economy?
Well, I think anything that's more regulation. I mean, this administration has been very regulatory-minded, and I think that's creating uncertainty with business people. I think they want to hire people, they want to grow their business, but when they see additional taxes coming on board or additional regulations coming on board, they get nervous and they sit on their hands. And I think that's why you'll see cash balances, especially in the institutional as well as the individual level, continue to build in here. And we think cash balances will continue to grow and be somewhat of a sore point for businesses.
I'm glad you mentioned this idea of cash balances that exist. Is it possible that we'll get to a point where the bank will actually charge charge depositors to hold their money?
Oh, I mean,
because talking about rates, you're getting nothing.
Absolutely. Boy, I hope that's not the case. I mean, obviously, there were people buying Treasury bills at negative yields just a few weeks ago. I think the banks there's some spread game that they can play to continue to give their depositors some positive spread.
All right. So you don't think that the liabilities are going to affect the bank's balance sheet that much?
Oh, I'm not an expert in that field, but I certainly hope not.
All right. Henley Smith, we were talking a little bit about the psychology of business right now, the fact that they have these huge cash balances. Is something necessary? Does something have to change in Washington? Does the rhetoric, the tone of discourse need to change in order to convince businesses to use some of that money, or is it never really going to come off the balance sheets until the economy changes?
Well, I think a little bit of both, but first the rhetoric has to change. I think that, as I said before, besides defending this country and its citizens, I think the government's first priority is to create an environment of good economics, and I don't think they've done that. I think they stepped out of the gate initially, this administration, looking at big spending programs and specifically in healthcare, instead of focusing on the economy and jobs. And I think when they go back and look at that, they'll say that probably was a mistake. So yes, the rhetoric has to change, and once that changes, I think this log jam of cash that's sitting on corporate as well as individual balance sheets will start to take some more risk on. But right now, it's going to continue to grow, and it's going to continue to burn a hole in people's pockets because, again, again, interest rates are at record lows.
All right, well, we keep talking about these cash balances, but are they necessarily here in the United States? You deal with a lot of multinational corporations. Are those cash balances here, or are they really overseas?
There are a lot overseas. I mean, I do deal with a lot of CFOs, treasurers of multinational companies, and a lot of those cash balances are held overseas. So that's a riddle that really has to be resolved, because I think if the tax code, and I'm not a tax expert by any chance, but if the tax code is fair enough and equitable
this
enough,
repatriation of profits, let's say,
if
to the United States at a tax rate that companies will at least agree
yes, if
that is worthwhile for them.
That money is overseas now, that money should be here domestically, taking risk, building jobs, building businesses, and I don't think it is, in my estimation. So I think if the tax code is written to such a way that that money can come back and be a domestic driver of the economy, I think that's something that should be looked at very strongly.
Tell me about the housing market right now, because of course when we look at interest rates, we always wonder whether interest rates are going to spur demand for housing. It seems as though the actual level of interest rates is irrelevant to the actual activity in the housing market.
I'm a big believer of velocity, velocity of capital and velocity of people. And I think what's happening right now is the velocity of people, the ability to move around and be efficient with their life, is being impinged right now.
They can't move from one state to the other because they got a house that's underwater, and as a result, they can't go and get a job somewhere else.
Capital isn't moving just yet for some reason. It's just building up on corporate balance sheets. And as a result, individuals' velocity has been drawn down. And I think that's a big part of why we're in this soft patch right now.
Do you think that legislators in Washington, or indeed even the president, understands that velocity issue?
I certainly hope so. I mean, I think a lot of people, myself included, have a lot of reservations given what happened in the last couple of weeks.
Reservations about what?
Well, is this new committee, this new super conference committee that's supposed to meet in November, are they really going to do what
the 6 Republicans and the 6 Democrats that are supposed to work out something?
Right now, I'm giving a big eye roll, because I think a lot of people in the United States feel the same way. Let's wait and see what they have to do. But I think given what happened in the last couple of weeks, it doesn't give you a lot of confidence that they're going to get the thing right.
And when you look at the independent commissions that have already proposed, like the Erskine-Bowles Commission that has already proposed various methodologies for dealing with the deficit, do you get any feedback from investors that those are good solutions for the problems?
I haven't yet, but I think we're ripping apart this new debt ceiling tax bill that we've seen, and I think that's one of the reasons why the stock market is taking it on the chin today, is because a lot of these savings and a lot of these new programs, if we will, really won't kick in until 2014. So I think there's a lot of wood still to be chopped.
Now, what about the idea of cash balances existing because businesses are reacting to new regulations which will allow business checking accounts to finally earn some interest?
Yeah, that's a new twist and a new regulation that came on board, I think, July 1st. And I think you'll start to see that. There have been programs in my world, FDIC-insured investment programs. I, of course, am an active Treasury manager, which is where I derive my performance from. But I think a lot of cash managers, treasurers, CFOs will start to look at checking accounts that are now can start to pay interest, and that might be a nice option for them. Even though I think they should look at, obviously, the separately managed account that I invest in.
Indeed. Okay. Well done. The plug. That's no problem.
AAA
credit rating for the United States, matter, not matter, now that we've got
it matters. I don't think it'll be dropped, but it does matter. But I think the genie's already out of the bottle a little bit, so I'm not sure.
People are already tarnished with that.
Absolutely.
All right. I want to thank you very much, Henley Smith, joining us from Commonwealth Asset Management. Always a pleasure. Great to have your insights. Thank you.